All right, welcome. Today, we're going to dive into an idea that could completely change the game for literally billions of people who've been left out of the financial system.
So let's just start with a number. 1.7 billion.
Yeah, that's how many adults around the world have no access to a formal bank account. I mean, think about that. They're basically locked out of the global economy, stuck dealing with insane fees, they're often isolated, and they have zero way to build a traditional credit history. Now, this creates a world of challenges, a world without banks for so many. And yeah, it's a massive problem for global development, for sure. But it's also one of the biggest untapped economic opportunities on the entire planet. And how big is that opportunity? Try this number on for size. $5 trillion. That's the credit gap every single year just for small and medium-sized businesses in developing countries. It's staggering. So that's the big question, right? How do you even begin to solve a problem this huge, especially when traditional banking has completely failed to do it? Well, the answer might not be in inventing something brand new, but in taking something ancient and giving it a serious upgrade. And that's where we get to the community-powered solution. This is really the core idea, the big insight, behind a company called POOLiNNOVATIONz. Okay, so for literally generations, communities all over the world have used these things called ROSCAs. They're basically informal savings circles. The whole thing is built on trust. People pool their money together, and they take turns getting the full pot. It's how they funded businesses, paid for school, you name it, for centuries. So here's the genius of it. You have the old way versus the new way. POOLiNNOVATIONz takes this time-tested community model and just supercharges it with modern tech. So you go from being cash-based, which is risky, to being digital and secure. You go from being limited to your little local group to being globally scalable. And this is the real kicker. You go from something informal and unrecorded to creating an actual formal financial identity for people. Okay, so that sounds great in theory, but how do they actually pull it off? Let's pop the hood and look inside their digital toolbox at the key pieces of their ecosystem. All right, first up, you've got the POOLBANK Core. This is the foundation, right? They digitize the whole savings circle, making everything transparent, automated, and trackable. Okay, next, you need to be able to move the money around. So they build these low-cost payment rails. This is what lets people do peer-to-peer transfers, pay bills, send money home, all cheaply and efficiently, whether it's across the street or across an ocean. Now, this is where it gets really revolutionary, their credit engine. It's a behavioral system that uses group dynamics to figure out risk. Think about that. It's not about some arbitrary credit score. It's about your reputation in your community. It's about social collateral. And finally, the last piece of the puzzle, token integration. They use tech to turn these community savings into secure, tradable digital assets, something they call the $LOT. Now, why is this so important? Because it takes that informal savings and makes it a real formal asset, something you can actually use and trade, unlocking its value for the whole world to see. So what's so cool about this is that it's not just some charity project, you know? This is the business of inclusion. It's a real sustainable business. And their business model is actually really smart. It's spread out across 4 main areas. You've got small transaction fees, some asset management, credit servicing, and even B2B partnerships. The beauty of this is that it keeps the costs for the actual users incredibly low while making sure the whole platform can grow and sustain itself. And here's the proof that it works. By using that built-in community accountability, social pressure, they've gotten their default rate in pilot programs to less than 3%. I mean, that number is it's unheard of in the world of traditional microfinance. It's incredible. Okay, so the tech is powerful. We get it. But here's the million-dollar question. How do you take this slick digital platform and actually connect it to communities that still run, for the most part, on cash? How do you get from local stores to a global scale? Well, they use this brilliant hybrid strategy. They partner with the places people already go to and already trust. The local corner store, the check cashing spot. These places become the physical on-ramps and off-ramps for the digital world. So for you, the user, it's a familiar, safe place to put cash in or take cash out. And for the shop owner, it's a whole new way to make money and get more people in the door. It's genius, really. It builds that critical trust in the infrastructure all at the same time. Okay, so all this brings us to the future. What's the real potential here? If this model actually scales up, what could it be worth? Well, some independent analysis shows a pretty clear three-step path for growth. You start in the pre-scale phase with under a million users and a valuation in the tens, maybe $150 million range. Then you hit the scaling phase. You get a few million users and boom, you're talking hundreds of millions. And then at maturity, with over 10 million users, you're looking at a valuation well into the billions. And this really shows you the long-term potential. Get this, at just 10% of the global market, that's it, projections put the potential valuation as high as $70 billion. It just goes to show you, the size of this problem is matched only by the size of the opportunity. And really, the ultimate goal here isn't just about building another big company. As they say, it's about democratizing financial access, creating real opportunity for billions of people. It's about fundamentally changing who gets a seat at the table in the global economy. So it really leaves us with this powerful final thought, right? Could a model that's built on trust, not on credit scores, could that be the actual key to unlocking global economic opportunity? It really makes you wonder. Maybe the future of finance looks a whole lot like its past, just, with a major tech upgrade.